Hello everyone, today is Friday, May 14th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning in, welcome. Thanks for joining us. We break our analysis up into two parts. In part one, we look at the data, we look at everything that went on this week in markets, from volatility to sectors to internals to correlations, really sort of just pick apart everything that stands out, looks different, looks unique. And then in part two, we jump into the charts, we look at those longer term trends, try and make some sense of where we are, where we might be headed, and how we can best position ourselves looking ahead. So hopefully that sounds good to you. Hopefully you're in the right place. Let's jump into this week's market analysis. So a few of the headlines and takeaways from this week. We saw stocks really get saved on Friday. We saw an aggressive rebound, a bounce back on Friday's session into the weekend, which really sort of capped off an otherwise very ugly week for most areas of the market. It was a pretty brutal week of selling, but we got that save on Friday, and that left us with another very aggressive VIX fade from the highs. Now, last week we saw this happen. We saw the VIX jump up north of 20 and sell off, reverse course and sell off and close the week near its lows. This week, we came ripping out of the gate for the VIX to new highs. I'm not even sure, we'll look in part two of this on how high we got in the VIX, but much higher than last week, that's for sure. Almost up to 30, I think, if I'm not mistaken. But we saw another very aggressive fade, and we closed up in the VIX this week, but still well off of the highs. And I think that's still telling here that this market is kind of still stubbornly resilient from a longer term sort of pullback perspective. And that is, certainly debatable. We're going to look at both pros and cons, or bullish and bearish sides to that a little bit later in this video. We saw the dollar down, we saw rates up as the general sort of flows this week. So if we jump into the numbers here and we take a look at the action on the week, you can see that everything was in the red. The Nasdaq continues to be the underperformer. The spot is getting the least amount of love in this market. And the Dow Jones is still kind of the best performing on a relative basis. In fact, you can kind of see that even more clearer on the 1 month numbers now. So if we look at the 1 month returns for all the major indices, you can see just about everything is negative now, except for the Dow Jones. Nasdaq 100 is the relative underperformer there, again, down 4.62%. If we look at market internals, here's where we can get a little more hope, but there is some cracks in the old armor that we should point out here. So market internals, we're looking at two statistics here. We're looking at the net 52-week highs and lows, and then we're looking at the cumulative sort of AD line. And the AD line net on the week was negative. So it was down 2,000. That's even despite the fact that Friday we had almost 2,000 stocks advancing on the day. It was still a net negative week. And if we look at the number of stocks hitting 52-week highs minus lows, that was still a strongly positive number on the week. But notice it all came from Monday's data, Monday's session. So we had kind of the last real surge to the upside before the numbers really and very abruptly started to decrease across the rest of the week. So you can see we went negative here on Tuesday, slightly positive Wednesday, negative again Thursday, more positive on Friday. So this is a change of character here. When we look at our next graph, our next slide here, you can see this is the cumulative 52-week highs minus lows, so all sort of summed up over the past 30 days. And look at the abrupt sort of change in this nice steady uptrend that we've been seeing. We completely sort of flatline this week. And so this is giving us a slightly different look now, or it's giving us a warning sign that's saying, okay, something has changed here. There is a new sort of force in the market, and we can assign all different reasons and sort of causalities to it. But the bottom line is the data is now showing us that we have gone flat here, and it should have our attention if it starts to now decline and head lower. That is where the markets, to me, get a lot less exciting to the upside. They get a lot less bullish to me if I start to see this trend turn south. So I'm going to be watching that very closely over the next couple of weeks. It hasn't happened yet, and it's just moved sideways. So let's give it the benefit of the doubt. Let's look at Friday's rally, for instance, that, okay, the buyers are stepping in. They're trying to essentially keep this momentum alive, and we'll see if they can actually, succeed in that mission next week. So I'm going to be paying very close attention to the stocks at 52-week highs and 52-week lows next week, and I think you should too. If we look at sector performance this week, you can see mostly negative here. This would have been basically all negative if it weren't for Friday again. We had 3 sectors in the green. We had consumer staples, we had financials, and we had materials. All of them very, very weakly green, but still green and relative outperformers on the week. Now, on the downside, we saw consumer discretionary was the weakest, followed by technology and communication services, down 1.5% to almost 4% on the downside. You can see also in the 1-month numbers, we're starting to see a few more things creep in here on the negative. Looking back over the past month, technology, discretionary, and utilities, all 3 have gone down over the past 1 month worth of trading. In terms of correlations, I didn't really see anything that stood out this week to me. I mean, there's kind of the same that we've been talking about, and, we can look at the dollar to, very strongly inverse correlated to gold. That actually makes sense, though. Historically, that's kind of what you'd expect. Dollar goes up, commodities go down, dollar down, commodities up. So that's really sort of just playing itself out. So there really wasn't anything else that really stood out to me when I looked at this chart. So we're just going to kind of move on here. And that's part of, the process of looking at lots of different data is oftentimes there's really not much to learn from it. And it's just kind of noise or sort of random movement. So not much to say in my head from that slide. If we look at volatility, you can see this week we saw the entire term sort of move up. So we basically saw last week the VIX closed at 1669. This week it closed at 1870. But again, like we kind of mentioned at the top of the video, that's a lot better than what it was trading at intra-week. We're going to look at that a little bit later in part 2. So VIX term structure here back up into the high teens. You can see the 3-month is priced up in the 22s, 24 6 months out, 24s a year out. So kind of fairly standard behavior, and it slightly less steep now in terms of the front month and the 3-month after this week. If we look at interest rates and credit, so interest rates, yields were rising across the curve here this week. Yields were up. That means bonds are down. Investment grade bonds here, you can see we're down. High yield bonds were down. Makes sense with sort of the dynamics that we've been seeing this week, and nothing really stands out one way or the other from this table. If we look at dollar and commodities here, you can see that the dollar was slightly higher on the week, so it's up just 0.12%. And if we look at commodities, it was a pretty mixed picture. I mean, gold was up, silver was down, Bitcoin got hit pretty hard this week. Lots of kind of outside comments there. We had, kind of lots of things going on with some investigations on exchanges. We had the whole Elon Musk sort of stopping, or Tesla, I should say, stopping their acceptance of Bitcoin, which really doesn't impact too much from a actual narrative perspective on Bitcoin long term, but certainly giving it the excuse to sell off this week. And agriculture was down 5%, WTI up a little bit, natural gas up a little bit. So a fairly mixed picture there in terms of commodities. Report card overall was lots of strikes against this market this week. We had market breadth, which eked out a positive check mark, but all things being equal here, it was fairly dismal. It was a D in terms of performance. lots of room for improvement. And like we say, next week, we're going to be paying a very close attention to a lot of these things to seeing if they in fact can improve and if the buyers and bulls can get some follow through to Friday's rebound. Now, in terms of our trading systems, the way we're positioned here at the Trade Risk, our Merlin trading strategy at the top here is still pretty much fully, 10% cash essentially, or 10% on the sidelines, pretty bought in still to this market. There was lots of rotation amongst this system, so there were lots of names we were getting stopped out of and essentially finding opportunity though in other stocks. So that's kind of been the situation for this strategy over the past 6 months now, even longer at this point. We are continuing to just see opportunity out there, even during some of these pullbacks. And this pullback is arguably one of the more extreme pullbacks we've seen, I guess, this year. But we are still seeing enough opportunity out there that we're putting cash back to work. Again, that could start to change next week. If we get another heavy week of selling, then I have to imagine we're going to see this trading strategy start to dial back a little bit and go a bit more defensive. Our bottom trading system, Lamerick here, so this is much shorter term. You can see this is basically not exposed at all to the market right now. It had some long exposure on, it had shorts. It's been rotating through this and performing pretty well given all the volatility. Right now, though, it's got two positions on. One's a long, one's a short. So that's why you're seeing it basically not exposed to the market, because it's essentially fully hedged right now. One long, one short, and a bunch of cash. So that's kind of the way it's looking at the market or thinking about the market right now. It's kind of making up its mind based on some of this volatility and two-way trading that we've seen. So if you want to learn more about those two trading systems, including signals and trade reports on a daily basis to your inbox, you can learn more at the link in the top right of your screen. And with that, we'll be back in just a moment here with some charts. All right, we are back. We've got TC 2000 open. This is our equity market grid. So we've got the S&P in the top left, Nasdaq top right, Russell bottom left, and ACWX, which is international stocks minus the United States, in the bottom right. Price itself is the white dashed lines on all these charts, and the multicolored dots are a custom smart trend filter we've developed for TC 2000. Measures price and volume, helps us determine trend and trend strength. So speaking of trend and trend strength, when we look here at the weekly time frame on all of these major indices, we've got some things to take notice of. In fact, 3 of the 4 now, so one being international stocks, are in a yellow sort of transition mode now. So look at the Russell here in the bottom left. It is back into the yellow state. If we look at the Nasdaq in the top right, that's in a yellow state, and ACWX here now in a yellow state as well. So what that tells us is that the trend has weakened and that there are some cross currents, there are some mixed signals on this time frame, in this case being the long-term time frame. So that is a different sort of signal and actionable item that we should be paying attention to, because for the longest time we have been sailing uninterrupted in a very steady long-term uptrend. Now remember, there is 3 colors to these dots for a reason. The yellow is simply, again, the neutral cross-current state. So it's not necessarily a sell everything, the trend is about to break down. It is designed to help kind of smooth out the noise so you don't, completely sort of freak out when the weakness and when some volatility comes our way. So the idea here now is that we want to pay a closer attention, and for that we go down, and before we go down to the daily chart, again, speaking to the S&P 500, this is the standout performer, because clearly you can see this is still green. There is no transition in sight here. Price is still well above its trend filter. So the S&P 500 on a relative basis now performing much better than everything else on this chart. Now, if we go down to a daily time frame on all of these instruments, we get a little bit of a closer look. We get data that doesn't go back as far. We look at days instead of weeks, and the trends and the time horizon that we're measuring these trends is much shorter. So when we look at this picture here, you can see again a very sort of mixed and choppy sort of picture. The S&P 500, based on Friday's rally, went back into its neutral state, but notice it transitioned lower Wednesday and stayed bearish on Thursday. And then the Nasdaq rolled over a little over a week ago. So this was back Wednesday the 5th is when this produced its first sell signal here on the daily chart, and it's proceeding and continues to produce a sell signal right now. So this goes to show you that the Nasdaq continues to be objectively the weakest from a trend momentum perspective. And the Russell 2000 down here transitioned back up to neutral on Friday, but still it's after a sell signal from a couple of days earlier. So that is the objective sort of volume, price, trend analysis. Let's take a look at some candlesticks now. Let's look at some supply and demand a little bit tighter and see what we're working with. So this is the roadmap that we were looking at for the S&P 500. We have been, if you've been tuning into these videos on a week-to-week basis, we basically, measure everything in real time, of course, and kind of plan out our week ahead. So we've talked about this roadmap. We've talked about these levels and ranges. We had this very, very tight range in here. We had this sort of breakdown failure last week where we got a wick all the way down to almost 41.25, and then we reversed, we closed and broke out to new highs, and then come Monday we came reversing course, falling back into the breakout zone, gapping down on Tuesday, selling off aggressively Wednesday, and then seeing an inside day Thursday and follow through to the upside on Friday. So we got kind of the full, didn't get quite a full round trip, but we got certainly whipped around this week. If you were trying to follow this action, we came slamming down and then bouncing back up aggressively. So a couple of sort of key sort of standouts here. I mean, these levels I have drawn, I think, are still pretty relevant. The fact that we got back over 41.21 here in the S&P 500 on Friday, I think is a net positive. It also does sort of introduce a new level we can pay attention to, which is essentially Wednesday's lows now, around 4,056, because that is now a good, hard reference point from where we sold off in sort of a mini capitulative sort of fashion to where we then rebounded from. So looking at the S&P 500, all I'm sort of looking at here, so we filled the gap on Friday from Tuesday's follow-through day, but all I'm envisioning here for the S&P 500, and I could be flat out dead wrong, is something like what the IWM took, where it then started to kind of just move sideways and really kind of develop in a longer, choppier range that basically went nowhere. Now, I don't know that that's going to be the case here for the S&P 500, but my initial instincts here is that, maybe we don't just rip to the upside. Maybe we don't reverse hard to the downside. We just chop around here in between, call it 4,100 and, 42 and change for the next couple of weeks, or maybe for the month of May. That's one possible scenario. And, the other scenario, of course, is that we did just wash out and had a capitulative sort of week here. We washed out a lot of the week longs. We got this false breakdown, sucked in some shorts, and now we can just go off to the races. I mean, if we get that next week, we would expect to see then follow through back over 4,200 and then start getting closer to those new highs. And if that's the scenario, then we could certainly be off to the races. We'd want to look at our market internals. We'd want to see more 52-week highs being made. We'd want to see breadth start to expand. We'd want to see volatility continue to come back down under 20. These are all the things we would be looking for, the clues and the ingredients, if the buyers are going to really prevail here and start, running away with this market. If we see something in between that, then again, maybe some choppy action here and some sideways trading as this market kind of figures out what it really wants to do. If we go to the Russell 2000, you can see this one here, as we just kind of flashed a moment ago, has been going sideways for quite a long time. And, despite the fact that it was down, pretty sharply earlier in the week, down to around 211, it still hasn't broken structure, right? Like this is still just a mess. It's just a headache, and it's still gone really nowhere for the past 3 months or so, almost 4 months at this point, going sideways and chopping around between 210 and 230. So this here is back to essentially the middle of this range where a lot of supply has traded, and it's still very much in chop mode. Really don't have too many other comments to say about it, except for we're still kind of waiting to see, does this whole big mess in here that we've been watching for the past couple of months take place? Does this end up turning into a continuation pattern to the upside, or is this a topping pattern that the market ends up breaking down from? Either way, it's getting pretty lengthy in its duration, so we should be paying pretty close attention to this as we look ahead. If we go to the Nasdaq 100 here, so this has been the relative underperformer. It's been the weakest of the major indices. That's not new news. We've been mentioning that for a little while now, and we continue to see that this week. Again, it's still got a pretty sharp bounce back here on Friday, but you can see, even though it got a good 2% rally on Friday, this short-term trend, right, this channel, the overall slope and trajectory of recent trading is still very much down and to the right. So we are seeing a Nasdaq 100 that continues to be in a down channel that is selling off pretty aggressively. We talked about in our midweek video this week. So on Wednesday, we talked about the Qs a little bit in that video, and what I was looking for in the Qs here was a move back down to in the 310s to basically retest the March lows. We still very well might get it. We might not. If, again, we see sharp follow through and continuation higher next week, then, maybe we saw the lows this week. Maybe we did see the washout and capitulation, and this market can now start to resume itself back to the upside now that everybody's given up on growth and tech and all the things that were sort of working in high beta land. Maybe they can start to work again. And the other comment I would like to make, though, about the Qs as well is these market cap weighted indices, they really don't show much damage, right? Because basically, if we look at the highs to lows here in the NASDAQ 100, and this one was hit the hardest, it was only down 7%. This is a 7.5% correction. But I mean, if you look at some of the stocks that are just under the hood here, I mean, I'll just go to Tesla because it's obviously one of the bigger names that have been leading this market for such a long time. But if we measure, the correction here, this is a 37, almost 40% correction off of highs. Same thing with like a Square, which is, again, one that has been, really leading this market. This is 30% off of highs. You go down to Shopify, and you go down to all these real sort of institutional leaders now in this tech, in the tech rally, and a lot of the individual stocks are down, 30% plus. But the major indices, because they are held up by, the behemoths like Apple, which make up such a large weighting, a $2 trillion company, it is holding up much better than, say, an equal weighted index of some of the tech and some of these other names. So worth pointing out there. But I think, the moral of the story here is that the buyers now still have kind of the proof that this market is done correcting. They need to show that they can get some follow through and start resolving back to the upside. If we look at the VIX, and this is where I probably get most bullish when I look at the VIX because of these aggressive fades we're seeing off of the spikes. And so again, like I said, we saw it last week. We got as high as about 22 in the VIX, and then we sold off and proceeded to kind of sell off into the end of the week. And then we got this sharp move this week all the way up to almost 29 in the VIX. And then look at this fall off here in the last 2 days. We closed at 18 spot, 681. And that was a 35% fall from highs. So the fact that volatility does not remain bid and want to hold higher does make me lean or want to lean to the bullish side, but we just need to see more convincing in price action itself. So like always, mixed signals out there, and depending on your strategy and your time frame, you're going to probably, take action in different ways based on that information. So that is really the big key sort of driving points, I think, on the major markets. If we look at, let's just run into a couple of other markets here. I wanted to look at VIX, which we did. If we look at TLT, so TLT rebounded on Friday. Again, this is the long bond here. So we know yields were up, which means bond prices were down. And we can see that the TLT could be, you know, forming this potential bottoming formation, or at least this consolidation phase that it's in. It feels pretty comfortable moving sideways here in the 130s. And so it doesn't, you know, truly seem like it's going to make any big breakout trend moves in any single direction right now. Probably just some sideways grind here for the next couple of weeks. At least that's the way I'm sort of interpreting it. We saw USO have, again, a pretty good week, all things considered, up 0.63%, stumbling a little bit right around the old March highs here, but still the uptrend in crude is basically still on. Now, let's get into some of the sectors that stood out, sectors and industries that stood out. So I've got these two scans that I apply to all of the sectors and industries to sort of point out the bullish and bearish of interest. There's only one showing up on the bullish list, and it's coal. It's basic materials coal. If we look at the week's action here, it was up almost 4%. So you can see this is something that's breaking out to new highs here despite the, you know, let's call it chaos that ensued this week in markets. And if we look at some of the stocks that make up this list, it's not a big list, and I don't ever really trade these names in here, but you can see the list of stocks here in this basic materials coal industry that was performing pretty strongly this week. So if that's your cup of tea, then that's probably something to pay attention to as this breaks out to new weekly highs. Now, on the downside, bearish of interest, we had a few different things hitting this list. So we had auto manufacturers as the number one here. So a high volume sort of close at new recent weekly lows here. So that's something where we're seeing some, you know, excessive weakness. We actually also saw a pretty strong reversal out of copper. And so basic materials sector as well. And this is why industries matter, right? Because if I just say basic materials are up or down, you know, look at coal, which was our only bullish one. Coal did great. Copper, not so great, right? The relative price action here is very different, even though they're both technically in the basic materials. So you got copper stocks here, which really there's not many that are making up this. So I guess this is FCX mostly driving this, and, you know, a few other things. Quite honestly, you know, this doesn't even necessarily look a whole very, very bearish here, at least FCX, the one I happen to pick up, which is Freeport. You know, this is still in a very nice uptrend. But, you know, again, when we look at the industry as a whole, and we look at that weekly chart, you can see just a bit of an outside bearish reversal. Lumber and wood also getting a pretty good turnaround this week. I mean, lumber's been on fire, and, you know, it has reversed course this week, done it on some heavy volume. So that's interesting. We saw real estate services down this week, so pulling back as well. Semiconductors doing pretty heavy action here for the 5th week in a row. And then finally, specialty retail. See what makes up this list. There's a lot in this one here. And this had a pretty strong snapback on Friday, but also, you know, on the week here, pretty weak, all things considered, closing at new lows on heavy volume. So that's the drill down on the sectors and industries there to refine your analysis. Maybe take a look at some of those stocks. If you are leaning, you know, up or down on the market, you can drill down and try and get the sector and industry alignment in your favor as well. So that is everything I had to talk about. Hopefully this video was helpful. Leave a comment below if it was, and let me know what you are looking at throughout this week and what you're planning on or prepping on for the weekend. What stood out to you? What looks interesting? And what are you thinking about this market? Leave a comment below. I love to read them. And as always, I want to thank you for tuning in and watching, listening to these videos every Friday. You can subscribe to our YouTube channel or follow us at thetraderisk.com. Have yourself a great weekend. We'll see you back here next week.